please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Power Breakfast. We are in the Mumbai News Centre. I'm Nigel D'Souza, and with me is Ekta Batra. Hi, Ekta. Good morning. Well, it's been a nice long weekend, but we have got a big week this week. Earnings as well as budget 2018.
Yes, morning Nigel. Well, we have a lot of cues to reckon with, global for today, and a lot of earnings like Nigel mentioned. But I think top of mind will be the run-up to the budget on Thursday. So all eyes, all news will be trending towards that.
Well, in the urban markets, we saw more or less more green than red. In fact, corporate news, political news as well. That's what lifted sentiment in Friday's trading session. The French CAC, that outperformed, that gained closer around 1%. On the data front, well, UK gross domestic product, that accelerated during the last 3 months of 2017, rose closer around 0.5%, and that helped the FTSE, in fact, to end high with a gain of closer around 0.5%. But it was not just the frontliners. The peripheral indices, the Italian index, the Irish index, both of them ended with gains of closer around 0.5% to closer around 1%. And in terms of emerging markets, it was a mixed bag. The Brazilian index, that ended high with a gain of closer around 2%. On the flip side, you had the Russian index, that was down closer around 2% out.
Right, and in the currency space, the dollar continues to be in focus. It wobbles near 3-year lows against a basket of major currencies, struggling to rebound from 6 straight weeks of losses amid doubts of the US government's commitment to a stronger currency. US Treasury Secretary, his comments on Friday gave the dollar bears a big boost with a big endorsement of a weaker dollar.
And in the world of commodities, then, there's some pain for the US dollar. That's a gain, in fact, for US oil prices. NYMEX crude prices touched a 3-year high of $66 on the back of the greenback weakness. Currently, Brent crude prices as well holding comfortably above $70 per barrel.
From precious metals, gold climbs to 17-month highs as the dollar continues to slide. Back home on Dalal Street, the market snapped a 6-day gaining streak, closing lower despite a late recovery. So the key indices ended lower, with the banks outperforming, recovering around 300 points from the lows to manage to end in the green. But we did have an FII net buy figure which came in, so it's close to, I think, around 9,000 odd crores now, Nigel? Yeah,
$1.5 billion is what they pumped in the month of January itself. But as Ekta said, yes, we broke that winning streak, but it's been, a great run in the January series. We had the best series since March 2016. January has been a big mover. It lived up to its names. And in fact, FIs, they pumped in closer on $1.5 billion. Why do I say that January is being a big mover? Well, you pull up the data, it should come up for you on the screen. We gained roughly around 600 points in 2018, and otherwise as well. It's been a 500-point move that we see in January if you just take a look at the historic data. Also, why do I say, in fact, it was the best series all the way since March 2016. We gained close to around 600 points approximately, but otherwise, I think in March 2016, we were up close to around 750 points odd. Well, it was a series where IT stocks, they bounced back. So all of them should come up for you on the screen, gaining between around 14 to around 20%. Some of those financial as well as housing stocks as well, housing finance stocks, they did well. And a couple of heavyweights, ICICI Bank and HDFC Bank, they did well. But you look at the headline and say everything was so good. Well, a couple of those big gainers like Page Industries and Eicher Motors, they trade at around 30 to around 50 times its forward earnings. Well, they came in for selling pressure. In fact, I've not seen both those two stocks down closer around 10 to 12% in a single series. So some money was being taken out of the table and in fact moved to some of those IT stocks as well. UPL, for example, in Thursday's trading session, it came out with its set of numbers. Didn't look didn't look that bad, but the stock was down close to around 7%. We seem to have ignored that. Deutsche Bank, they have come out with a note. They believe that, in fact, that was a buying opportunity. So you pull up UPL, you'll see that, in fact, that stock, which has been a big multi-bagger, it ended virtually at the low point of the day. Volumes as well were very, very high in Thursday's trading session. It's the highest that we have ever seen, the total volumes at close to around 17 lakh crore approximately. Well, that told you institutional participation was very high. The FIs pumped in 940 crores approximately, but that was offset because the DIs, they are using this opportunity to lighten some positions. They sold into, into the FI buying. We're starting a new series today. February series starts off today, and we're starting it rather heavy. 2.5 crore in terms of total shares. So it's a heavy start to the series. The FIs, though, they're net long. They have 80% of their positions on the long side. Well, you would like to have some shorts as well, so they get squeezed out to push our markets higher. But that, the data point indicates that, in fact, they're net long the series. The big Q, that's going to be union budget later this week. Then, in fact, we shift focus to the RBI policy later this month. And, in fact, Q3 earnings, that continues as well. Ekta, brace yourself. We're going to be having a lot of volatility. Global Qs are positive. We'll be keeping an eye out on the budget, expect a big movement, and also keep an eye out on the India VIX. Remember, that's seen a big rally from the recent lows of around 10. It's currently at around 18 or 17.5 or thereabouts. So the India VIX will be moving around as well, indicating the kind of volatility we should be bracing ourselves for.
And stocks?
Stocks, well, let's start off with earnings first. What numbers do we expect today? Well, we have Imami, HDFC, Tech Mahindra from the frontliners. So we'll keep an eye out on these stocks. Maruti is going to be in focus. Remember, the numbers look more or less in line with estimates. Bit of a beat on the top line. But the lowering of royalty, that's going to be very, very encouraging because that's what could help the margins going ahead. And that came as a bit of a surprise. So you'll keep an eye out on that stock in today's trade. Well, Persistent Systems, IT has been doing well. Midcap IT has been doing well. Naveen tells us those numbers are very, very good. Top line growth, margin expansion as well. Avenue Supermart, you'll say that, well, it's an expensive stock. But who's selling? And the numbers look quite good. Good top line growth, good bottom line growth is what we saw there. Results of JSPL as well looked quite encouraging. The operating profit now is at around 1,600 crores, and that compares with the finance cost of around 970 crores. I remember times when, in fact, the finance cost was as much as the operating, profit. So that stock should open up in the green, as good as expected. LIC Housing Finance, well, there was a tad bit of a worsening in terms of, the gross NPAs, asset quality. Disbursements, though, pretty good. It was up close to around 12%. Though NIMs, there was some compression there. Shriram Transport Finance, well, those numbers look very, very strong. Disbursement growth of around 60% odd. So that stock opens up in the green. While Shriram City Union Finance, those numbers looked a tad bit mixed, and they are flashing for you on the screen as well. Sharda Cropchem, those numbers look quite weak. The profitability was down roughly around, I think, 40%, while Bulgaria Industries, so there, in fact, the numbers look good. We did have, in fact, the net profit that doubled. Mithun Alloys, well, good growth on the top line. Unfortunately, we had margin compression. And Tata Coffee, other triggers await the stock. Though in terms of their numbers, nothing really encouraging or exciting. The operating profit came in lower by around 6%. Future Supply Chain as well. First quarterly numbers that they reported looked quite good. Good growth on the top line as well as bottom line. And Cocoyo Camlin, or there, in fact, we had a net profit that compares with a loss. But Ekta, Divi's Laboratories, that stock we're going to keep an eye out over there. Some growth on the top line, though, in fact, we'll be waiting for commentary in terms of the US FDA and opening of their plants. And finally, SRG Housing Finance, numbers look good over there. The stock has been in 2 upper circuits, so keep an eye out on that stock. Well, time to get you some snippets of the big voices from the World Economic Forum at Davos. And Chairman of Sun Pharma, Israel Makov, has expressed confidence that the generic industry will withstand the pricing pressure triggered by the flood of approvals by the US FDA. In a conversation with Shireen, Makov said that the recent slump in generic prices is temporary in nature, a cycle that will be over after a certain period. Let's listen in.
First of all, let's put it right. For many years, the industry was complaining that the FDA is very slow in approving products. Now the FDA is approving.
Now they're complaining.
Now, so there is temporarily there is a flood of approvals. There is more intense competition. And the generic industry is going into a business cycle. It's always go into a business cycle. One it's a little bit down, one it's a little bit up. But the generic industry is going to stay there. It's not something that is going to disappear. It's a very important component of the healthcare industry. Without generics, the healthcare industry cannot really meet the price tag. First of all, it's the largest market, but we are gaining foot and gaining market share in other markets. take emerging markets and other markets. You know, we have to be better. We have to compete. We have to do things in a better way. We will compete, and we will survive it. You know, it's not something that is risking us. You know, and we are ready to do it, and we are doing it.
Well, shifting focus to earnings now. From the farmer space, Dr. Reddy's reported a mixed set of earnings this quarter. Ekta, give us a highlight of all the conference call details. Also, what are brokerages making in terms of their numbers?
Well, you know, I think one of the key things which stood out in terms of the conference call and what Dr. Reddy's is going to react to is that 3 of their drugs, Copaxone, Suboxone, as well as Nuvaring, generic, all of the 3 generic versions of these drugs that they've applied for is actually going to see a delay in terms of approval. So say the street was expecting end of FY18 to maybe FY19 mid. Now this is probably going to be pushed up to the end of FY19, and there are some queries which they need to resolve, etc. Combine this with the fact that Duvada is still an outstanding issue right now for them, and they need a re-inspection by the US FDA. That's probably going to weigh on the stock. In fact, I did speak to the management on Thursday evening, so let's listen in to what they had to say.
Renebla definitely has helped us during the quarter, and despite being the second to launch, we have been able to tap specific channels. The contracted market share has been there, but it has resulted in recent months. But of course, now there are more players. There are 5 players already in the market. So going forward, it may not be able to give similar kind of opportunity. But Lipodox, which we launched in previous quarters, again the contracted market share was higher, but now even in the IMS number you can see similar kind of reflection where the share has gone up considerably for us. So these will be couple of reasons where it has sequentially performed. In Canada, we have been able to launch azacitidine now, which is the first generics to launch there. So that will also provide some growth. So those are the avenues you have to look for. Copaxone, we have got queries on the DMF, so we'll have to respond to those queries now. So we are looking for somewhere in FY19 if Copaxone launch could be there. So Srikakulam, we responded to the queries that we received from US FDA, and we hope to resolve that soon with US FDA. And Duvada, we are yet to invite. We have been going through that cultural transformation journey and trying to gain more confidence. Of course, the recent inspection in FTO2 by the German regulator, where the audit has gone well and consequently the non-compliance has been withdrawn, has been giving us more confidence that we are on the right path in terms of our cultural transformation journey.
Well, sticking with the pharma pack then, Divi's Laboratories as well reported their set of numbers. Ekta, what do you make of these numbers?
Well, I don't think these numbers are going to matter to Divi's Labs that much, simply because the street will just look forward to what exactly Unit 2 is going to do after they have received the EIR or the Establishment Inspection Report from the US FDA. They've closed those issues there. Once it comes back to normalization and supplies, etc., that's when that's what the market will look for. So this time round, the revenue was up around 6-odd%. Margins declined all the way to around 31-odd%, with a profit decline of around 16-odd% because of forex loss also. But I think the street would forgive Divi's Labs for these numbers simply because of the kind of run-up that we've seen on the stock and the remediation that we've seen for Unit 2. But the other stock which would be in focus, according to me, Nigel, is Indico Remedies. It's not the earnings which will matter. It is the management who had on their earnings conference call on Thursday evening spoken about how they've received 8 observations for their Unit 1, the same inspection that we had broken details on CNBC TV18 with regards to an inspection by the US FDA in Jan. Nobody knew the number of observations, 8 observations in total, and I expect the stock to probably be in the red because of that particular piece of news. Let's listen in to the management talking on their conference call about this particular issue.
The US FDA inspection scheduled from 15th to 19th January 2018 at company's solid dosage plant in Goa, Plant 1. Company has received 8 observations that is 483s, and is in the process of preparing its response for the same. Company is in dialogue with US FDA with respect to the warning letter issued to Goa Plant 2 and 3.
Okay, well, moving away from pharmaceuticals now, JSPL is on our radar today after it reported its third quarter numbers. Nigel?
Well, the numbers were good, Ekta. We were bracing for a good set of numbers. Remember, the stock has had a big run in the last 1 year. The numbers were good. On the top line, in fact, we had a growth of close to around 30%. That was a tad bit higher than what the street was working with. Though the operating profit in terms of margins, you would like a higher number. But the operating profit as well, backed by a bigger growth on the top line, that came at around 1,600 crores. Now, that's good news because, in fact, now if you compare the operating profit with the finance cost, it's at around 1.7 times. I remember, in fact, when they were absolutely, square on over there, we had the operating profit that equal to the finance cost, telling you that the losses would be wider. Now, with, in fact, the operating profit much higher than the finance cost, the net loss as well has shrunk to around 270 crores. What worked for them? The steel business. That looked very, very good. In fact, the domestic sales, that came in high by close to around 12%. So, looked good, came in at the higher end of what the street was working with, 940,000 approximately. Now, we'll be seeing a ramp up of the Angul facility in the remaining quarters. The pellet sales as well came in high by only around 1%. But what helped them was, in fact, pellet realizations. They have gone through the roof. In the last 1 year, they're up by close to around 30%. And quarter 4 should look even better for pellet realizations, at least as per what the data suggests as of now. JPL, that's Jindal Power Limited, that in fact is their subsidiary. Or there, in fact, yes, we had an improvement on a sequential as well as a year-on-year basis. Top line growth, you had EBITDA growth as well, but margin, some compression over there, telling you that in fact coal availability wasn't really there. And, though their PLFs improved, that business continues to struggle. If that can turn around, then in fact it could give further legs to the stock going ahead. But what's really working for them is the pellet business. That was a small part. Now that's contributing more. Even in terms of the Oman operations, now in fact it's contributing close to around $63 million. There was a time that it was contributing only around 10 to around $20 million. And in fact that EBITDA that they've reported is the highest that we've seen ever. So Oman really is looking good. Credit Suisse, well, they say in fact the numbers were a beat on all estimates. In fact, in terms of target price, they've not revised it now, but maybe post the con call, we'll have to see what they do. It's currently at around 150 rupees per share. Valuations, well, that's a little debatable. If you take a look at the FY19 EBITDA, and if you assume that they do around 7,000 crores. Remember, for the past quarter, they've done around 1,600 crores. So assuming they do around 7,000 crores of EBITDA for the next year, and currently the enterprise value is roughly around 70,000 crores. You put the market capitalization of around 25,000 crores and in fact the debt of around 45,000 crores together, then in fact the stock is trading at around 10 times EV per EBITDA. So as of now, it's not very, very cheap and not mouth-watering as it was, though these numbers look good. But these are going to be the key triggers. One is the QIP that the management has indicated here on CNBC TV18 itself. And in fact, listing of the Oman business, that as well could lead to a sharp reduction in terms of debt. And that could give, a greater potential for the market capitalization to move on. Even in addition to that, besides a good operational performance in the steel as well as the power business, their international operations as well, the losses reduced to there. So good news. Well, the stock has had a good run. It should open up in the green, though it was moving around in Thursday's trading session.
Shifting focus to earnings, auto major Maruti reported quite a stable set of numbers, and obviously the royalty details would be in focus. We have Sonia joining in this morning to tell us more. Sonia, hi.
Hi, Ekta. Good morning. Yes, Maruti reported a good set of numbers in line with expectations on the top line and on the operational performance. The revenue growth was about 14%. The EBITDA went up by 22%. The bottom line was actually hit by a higher tax expenses as well as lower other income because of the way bond yields moved. So that impacted the bottom line. But otherwise, operationally, the performance was very strong. But I think what the street will be very enthused about is the fact that now Maruti will have to make lower royalty payments to Suzuki. The board has proposed that. The approval has not come through just yet. But starting from the Ignis, all their new products, they'll have to pay a lower amount of royalty. Currently, the royalty that they pay to Suzuki is to the tune of 5.5% to 6%. And the expectation is that if they drop the royalty even by about 0.5% or 1%, the impact on their margins will be positive. Most brokerages are upbeat on the stock. There was a conference call that took place as well, and in that the management mentioned that phase 2 of the Gujarat plant is well on track for January 2019, and that's important because currently they are facing capacity constraints because of which they cannot meet demand. So once phase 2 comes on board, then that will be a big positive for them. A couple of other key highlights from the conference call was that the rural market growth is quite strong. It's much higher than what they've seen in the past few quarters, and that really gives them hope for going ahead as well. However, commodity price pressure that continues, and that could perhaps restrict the upside in the margins in the near future. But otherwise, I expect the stock to be in the green today on account of the lower royalty payments to Suzuki.
Okay, all right, Sonia. Thanks so much for joining and giving us those details. But on to some big earnings that are expected today. HDFC, that's going to be the big boy in focus on the back of its third quarter numbers. Abhishek joins us now to tell us what to expect. Hi, Abhishek. Good morning.
Good morning, Nigel. So remember, in this quarter, one-time profit gain from the stake sale in SDFC Life will be there in the numbers of SDFC Limited. So post-tax, about 3,675 crore is what the number that they have already announced to the exchanges. That will be there in the profit numbers. Now, what we need to watch is net interest margin above 3.75 will be positive. Last quarter, it declined by 10 basis point to 3.9%. And AUM growth, that is loan growth of above 15% will be positive. Gross NPA, which was at 1.14%, will be below 1.2% will be positive. Our polls suggest an NII growth of just 9%. So this is the lowest growth that analysts are expecting in the last 7 quarters, while net profit to be up 191%. As I mentioned, remember that there is one-time profit from the stake sale in SDFC Life. Back to you.
Okay, all right. Thanks very much for that. But we have TechM, which will be reporting its numbers today as well. Ronit is here, filling in fact, to tell us what we can expect. Ronit, hi, morning.
Hi, good morning, Ekta. The stock is up close to 50% in the last 6 months and it's trading near its 52-week high, but we're expecting a muted set of numbers coming in. So we're expecting the dollar revenue to be about 1.8% quarter on quarter at 1,200 crores, largely driven by the enterprise vertical. But we're expecting the rupee revenue to be up around 2% at 7,700 crores, largely because the telecom division over there. Now, moving on to the EBIT margins, we're expecting a slight improvement of around 90 basis points, driven by operational efficiencies kicking in, as well as the improvement in the profitability of their subsidiaries. Moving on to the PAT, we're expecting the PAT to degrow at around 775 crores versus around 830 crores, largely due to a lower forex gain. And the constant currency growth around 1.8%. But the key things to watch out will be the roadmap for improvement in margins, as well as the management's commentary, as well as if there's any turnaround strategy in the LCC as well as the ComVR division. Back to you.
Okay, all right, Ronit. Well, the economic survey will be tabled at the Parliament today around noon. Lata's with us early this morning to tell us what can we expect. Hi, Lata. Good morning.
Good morning, Nigel. Well, I must first begin by saying that you must not overestimate the importance of the economic survey. It was very important at a time when data was not so easy. You didn't have internet, that all the data was accessible for the MPs who would judge the budget or even the citizenry. Now it's available. So to that extent, the economic survey, which is a survey of the year gone by, becomes a little pointless because everyone knows much about it. But nor should you look for, hints about the budget in the survey. The survey is the economist's job, and usually the finance ministry's secrets in the budget are not revealed in the economic survey. You don't even get a hint. The most important point that the survey says is what is the growth number that the budget will work with. That becomes important because if you say 3.2% of fiscal deficit, it is 3.2% of what? Yeah. That GDP number is what you will get from the survey, a vague guess at least. And then, there are several themes that the survey will definitely explore this time. GST disruption will be one. How much it affected the current year, and how much it will, you will reap the harvest in the next year. Some idea of what is the tax to GDP ratio they're expecting. Some such hints, very detailed analysis. And I must say that Dr. Subramaniam has raised the level of the eco survey to a high which it did not have in previous years. So you must expect some very thorough work on that. The other things which he could dwell on would be rural focus, because farm distress is so much a conversation, job creation. And he could, of course, also concentrate on capex and how much of a stimulus the government can do at all. The rest of the themes will be his own ideas. They don't normally impact the budget. They're just good reading material. But this growth number is really the most important number that we would look for.
Gupta is joining in now with an update of all what's happening in the commodity and currency space. Manisha, hi, morning.
Hi, morning, and thank you for that. Well, it has yet another week which has started on a positive note, at least for the crude oil prices. Remember, we gained 2.5% for Brent and more than 4% for the WTI crude oil prices in the previous week. The only hindrance really is that you have seen the U.S. rig count increase to above 900 oil and gas rigs. So that is something that the markets are watching out for. This is much higher than what we have seen in the last couple of years. But the U.S. shale output also is something that has been factored into the prices. It really has to do with the coordinated output cuts, the surprise outages, the weakness in U.S. dollar, the strong demand estimates going forward. All of that is keeping the crude oil prices higher. And when you look at the Brent and the WTI net long positions in the speculative market, those still continue to hold around record highs. Another area which has done quite well for itself in the first month of 2018 really has been the gold and silver prices, holding around $1,350 per ounce. Not just the weakness in U.S. dollar, but the geopolitical concerns, the strong demand that we are seeing in India and China ahead of the Lunar New Year holidays is something that is keeping the prices higher. So trading around those 5-month highs in gold even today.
Okay, all right, Manisha, thanks so much for joining and giving us those details. But let's get you all the cues coming in from the derivatives market. Remember, we kickstart a new series. Mangalam joins us early this morning to run us through all those cues. Mangalam, good morning. The most eligible bachelor coming back from Jaipur today. Yeah, everyone's going to be tracking you, Mangalam. Tell us the cues, though.
I will tell you the cues, and the other one I will choose to ignore, Nigel. Yes, we're starting the Feb series, and yet again, we're at the highest level at the start of the series for the Nifty, and the rollovers were 66%, a tad bit lower than what we saw in the last 3 series, but then again, we're at the highest level, 592 points as we gained in this series. The only matter of concern, we're starting a little heavy, 2.5 crore shares in Nifty open interest. That compares with around 2 crores over the last 3 series. And the FIIs, they're 80% long. So we're at record highs ahead of the series. We're starting the series with a heavy open interest and 2 crores and 20% higher open interest and 80% long contracts. The other thing in index options too, FIIs in long positions in both index calls and puts are absolutely equal. One call, a long call for one long put. But there are 2 short puts for 1 short call. That means that they're also playing for protected downside. So that is something we need to watch out for. In terms of stocks, I'll definitely be watching out for JP Associate. The first day of the series, that stock is in F&O ban. And 2 stocks, JSW Energy and Indocount, they cease to be a part of the F&O arena. They will start to trade in cash this series.
Okay, all right, Mangalam, thanks very much for that. And on that note, we're going to wrap up our breakfast.